Welcome back to the channel, guys. Nick Armenis here. In today's video, I'm going to be taking you through my thoughts on the Airtasker IPO, ASX ticker ART. Airtasker will IPO today on Tuesday, and I'm hoping to get this video to you before the initial, opening, but I'm not sure if it'll come out. But guys, I'm going to take you really in detail on my thoughts. I'm going to break down the business, and I'm going to tell you if I think it's fairly valued or not, what it does. I'm just going to completely cover it off. I'm going to go through, my notes on the prospectus. So I went through the prospectus in detail. The prospectus is the document that when a company IPOs, they put out and give you information on it, okay? So let's get into the video, guys. And if you do enjoy this content, please give it a thumbs up. Really helps the algorithm, and make sure you subscribe so you can be the first to know of any new videos I do. So before we get any further, guys, again, as always, I'm just a guy on the internet. This is not financial advice, just my opinion. So first step, guys, I'm going to give you a company overview to get you a bit of an understanding of the business. So what do? Airtasker is Australia's leading marketplace for local services, connecting people and businesses who need work done, customers, with people who want work, taskers. So Airtasker delivers a simple e-commerce experience to buy local services and creates flexible working opportunities and income for taskers. So they've got more than 4.3 million registered users on the marketplace today. In essence, it's an online labor and local service outsourcing app. It can be used through, an Apple or Android app, or through the website on the internet. So it's basically a marketplace. So if you want something done, you can either be a customer and get something done, or if you want work, you can list, you can bid on jobs and obviously make income through there. So what sort of services are offered? So service industries currently facilitated by Airtasker Marketplace include everyday tasks such as like handyman jobs, domestic cleaning, business admin, all the way to like more complex stuff like bookkeeping, tax compliance, all these different things, guys. Virtually anything can be on there. But this is from their website here. Home cleaning, house removals, these would be the most common things they do. Say item removal, so if you just want something taken at a tip or taken away, furniture assembly, handyman, marketing design, home and gardening, virtually anything, guys. If you want something done, you can list the job on there. And if you want to make some additional money, you can just jump on there and get some jobs through the app. So how does Airtasker actually make money though? So Airtasker earns revenue from charging taskers, so the people doing the task, a service fee, and customers a booking fee. So fees are calculated as a percentage of the task value agreed upon by the two parties. Airtasker only charges a fee on a successfully completed task, so you don't actually have to pay to join the platform or anything like that. To me, I think eventually they may charge a small fee for that, potentially, and they may be able to make additional money through that. I'm sure they're thinking about that. But I did the math, and I believe the fee is around 17%, so it's quite a big fee. So imagine if there's a $1,000 job, they're going to get $170 just for making this connection, which is pretty big. Key competitors. So guys, obviously we like to look at the key competitors to get an understanding of, just how unique is this business, how they're going to face challenges and things like that. So there's two main groups of competitors as outlined in their prospectus. So you've got local services with a single or limited category. So, you've got to think of things like Uber, Didi, which are ride sharing, which you can obviously also do on this app, right? Pet services, including Rover and Mad Paws, building tradies, including Thumbtack, High Pages also listed on the stock exchange, I believe, last year, and childcare, including care.com. You then have other marketplaces like TaskRabbit, High Pages, Rated People, Pro Referral, Thumbtack, OneFlare. There's quite a few of them. And then you've got things like Fiverr, Upwork, Freelancer, People Per Hour, Amazon, Mechanical Turk, all those different things. They're all kind of inadvertently competing with them. Most of their money, though, guys, comes from local services. So I wouldn't worry too much about the Fiverr, Upwork sort of thing. I think that most of their growth is going to come through local services. So why is the company going public? So why are they raising money, right? This is a very, very big part of assessing whether you should actually invest in an IPO, because if they're doing it for the wrong reasons, then straight away that's a red flag to me. And you got to remember, a lot of the time it's just owners cashing out and getting out of the business, which is not really a good thing, is it? Because if it was such a good business, they'd want to stay, right? Key reasons: This is what's outlined in their prospectus. I'm not making this up, guys. So provide Airtasker with capital to fund further development of the marketplace, international expansion, working capital requirements. The second reason is provide Airtasker with benefits of an increased profile that arises from being a publicly listed company. The first two I've got no issue with, guys. They want money to grow, fair enough. They will get more of an increased profile once they list publicly, sure. The one I have a problem with is this: provide selling shareholders with an opportunity to realize all or part of their investment in Airtasker. So there is a big outside investor, which the name eludes me right now, but if you read through the prospectus, it tells you, and basically this is the key reason. This is the main reason this IPO is going ahead. And to be honest, most IPOs go for this reason. It doesn't mean the business isn't good, but this is the main reason. And to me, it's always a bit of a concern. It then provide a liquid market for shares. Fair enough. Okay, that's pretty normal. Big issue I see: IPO proceeds will pay back selling shareholders and offer costs, with just 6 million of the 83.7 million allocated to marketing expenses and 4 million to go to the investment in product development. So you've got 6 million for marketing, 4 million to the investment. So the rest basically goes to the selling party. So 83.7 million being raised. And here is the breakdown. So 15 million is actually going to Airtasker. Saleco, that was the business I was referring to. I believe 7 Media and a bunch of other companies have a stake in that. So 68.7 million of this money that you will be, I guess, putting up is just going for people exiting. Only 15 million is actually going to Airtasker, which for me is like, it's not a great amount of money for a business to grow. So just based on that, it kind of makes me a little bit iffy to invest. And they only want 6 million for marketing. I mean, why wouldn't they want more of that 83.7 million for marketing? And then more for product development. And in terms of product development, I'm a bit confused as to why you would want to develop more products. You've got something that's working, put all that money into marketing or hiring talent, mainly marketing, and grow it. And obviously there you've got the IPO costs, which are 3.4 million, and then the shareholders, which that Saleco is basically a company set up to exit, right? There's a bunch of other people that shareholders in the other company, Saleco, they get the money and they exit the business. So the company growth strategy. So you've kind of understood why the IPO is happening. We're now wanting to understand, because if we want to invest in this at the current price, the company needs to grow, and it needs to grow quite quickly. So let's have a look at their growth strategy. They've got 3 key areas of focus: increase customer and tasker acquisition. I like that because the more customers and taskers they have, the more money they'll make. Improve usage frequency. So they need to obviously use data analytics and encourage people to use the app more frequently, right? So that's an education piece. That's using data to obviously make offers, suggestions, things like that, get people on there more often, and expand the addressable market. Cool. Totally like all those things. Makes sense. So the initiatives, growth marketing, so investing in organic and paid marketing initiatives to drive new customer acquisition, and organic marketing initiatives to drive new tasker acquisition. Okay, cool. So I like that. I mean, I run a marketing business, so I understand that, and it's a smart move. It's going to be expensive in this area because they do have competitors. Second, Airtasker Superstore, establishing a new marketplace such as Airtasker listings, instant booking, subscriptions to increase customer and tasker usage frequency. I'd need to do more research on that. I don't quite understand what that is, guys, why they'd make another one. It's probably in the prospectus and I missed it. International expansion, launching into new geographic markets by leveraging Airtasker scalability. Cool. This makes total sense, but I'm sure there is competitors overseas for these exact same things. So again, this is going to depend a lot on marketing. And the meager 6 million that they got for marketing, I don't know if it's going to cut it. It's not a lot of money in marketing. I know myself being in the business, so I think that's a bit ambitious, but we'll wait and see on that one. How did COVID impact it? I like to see how it got impacted by COVID, because I go, if lockdowns continue, if they got impacted bad, this may be a key risk to them missing their forecast. And once a company IPOs, if it misses what it says in the prospectus, it gets whacked hard. Look at MyDeal, look at Nuix, all these businesses that missed, they're getting absolutely walloped. On top of that, we're getting into an environment where higher rates potentially are going to impact these lofty multiple stocks. So Airtasker did experience a drop in the marketplace activity in the early phase of COVID, but then rebounded to normal once restrictions were lifted. So this tells me it wasn't a COVID beneficiary, so it didn't benefit from COVID, and the model isn't resilient enough to cope with this, right? Because people don't want strangers in their homes when there's a pandemic. Will this continue? The lockdown and stuff like that, it's a risk. Just wanted to highlight it. So the numbers, sales, revenue, margins, debt, scalability, things like that. Airtasker is projecting 143.7 million in gross merchandise volume. So this is GMV. They refer to it a lot. And that's basically the volume of transactions. It's not the money that they get, right? So the revenue is forecasted at 24.5 million. That's where I got the 17 odd % that they charge as a fee, because that's the 24.5 million. And a 2-year compound annual growth rate of 32.1%, which is growing very fast, guys, right? So the company is expecting an after-tax loss of 6.2 million, so it's going to lose money, and that is up from 1.1 million from last year, although a significant improvement from the 2019 year loss of 27.2 million. So obviously they're probably expanding and growing the business and reinvesting in that, but that's where some of your money's going to, right, guys? You're funding a bit of a loss. So this company is not making money, it's losing money. So here are the key financials. I won't go into too much detail, guys, but as you can see, 19, 20, and 21, there are increases in almost all the key metrics. The Airtasker average value to me is a concern as to why it jumps that much. I don't know what they're doing to improve that. And then if you look at the amount they were spending on marketing, which is the GPAPA, which I show you there, is gross profit less paid and direct marketing expense. That's climbing a lot there in a few years, and it tells me last year they didn't spend much on ads, and they're going to spend a little bit more. But 19, they spent a lot of money on acquisition, so I don't know why that percentage isn't bigger. Why would you be stinging on that? I'm not too sure, but maybe they've got a reason. The management team and the track record and ownership structure. So the Airtasker co-founder, Tim Fung, will continue to lead a passionate and experienced team dedicated to Airtasker's ongoing growth and profitability. I like that he isn't selling many of his shares. I like that he's staying on. The directors, this is directly from the prospectus. If you go to page 113, you can understand a little bit more about them. They all seem fairly knowledgeable, got good business knowledge, financial management, corporate governance, guys. Nothing stuck out to me as being a risk or someone unqualified. And I like that the founder is staying on. Catalyst narrative. So this is basically any cool things or stories around the business or growth areas, just to kind of highlight it. It's a large addressable market. Australian local services market is 52 billion annually. If they can keep eating at that, they're going to obviously grow. And then if they expand into Ireland, New Zealand, Singapore, UK, US, that's estimated to be 591 billion in 2019. So it's obviously even bigger now in 21. It's a very scalable and capital light business model. It's an Australian play on the gig economy is what I like. And these are the main things, guys. There's not a lot in running this business. They don't have too many staff. It's just an app. And then it's a lot like Uber, right? The one thing I see as a big issue could be labor laws. So they're obviously going to have lots of different laws in different countries. But if Australia cracks down on this gig economy, which, Uber's been handed down some adverse, judgments in the UK. The issue here is, guys, that you might create an underclass of people that work on there who are making very little money and aren't protected by our labour laws, right? They don't get sick pay. And then on top of that, if they crack down, are they paying proper taxes, things like that? There's a lot of complexity that goes in here, and regulation is a big risk for these guys. Okay, getting to the IPO valuation. Do I think, what is it actually valued at, this business? So the IPO is basically valuing the company at 255.4 million, enterprise value of 226 million. So that is basically the market cap minus the cash on hand. They'll have 28 million in cash on hand, believe. GMV, so 1.6 times enterprise value over GMV. Over revenue multiple is 9.3 times, so not cheap at all. And over gross profit is 10 times. So obviously it doesn't have a PE really. It's a negative because it's not making any money. To me, 255 million is probably fairly fair, to be honest. It's not, you could see this growing into $1 billion company if things go well. You could even see a $2 billion company. So 255 is not a bad price to me. If it hits all those targets, right, it's still expensive. This isn't cheap. It's not making money. You're paying 255 million for a business that doesn't make money. Say 226 for a business that obviously it's say 226 for minus the cash, right? So they've got some cash on hand. But to me, it's still a little bit expensive, and I'll tell you in my next slide what I think about this, I guess, valuation. So would I buy it at the IPO valuation? I think the stock is fairly priced for the expected growth. It is expensive, but not crazy expensive. I like the concept, scalability, and capital light nature of the business. I don't like that so little of the IPO proceeds are going back to the business. That to me is a big flag. A lot of people are exiting. I don't like that COVID caused them all these issues, and if lockdowns happen again, they may miss guidance. I also don't like how a lot of recent IPOs in Australia rocket in the first 2 days. IPO becomes oversubscribed, and then it steadily goes down for the next 6 to 12 months after those few weeks. For me, I would wait till the next update or try to get in at a more attractive price, because to be honest, I think given the current environment where growth is falling out of favor a little bit, they may struggle a bit if this trend continues, and you may be able to pick this up at a better price. I think it's a cool little business, guys. Definitely worth having a look at. I'd love to know in the comments below if you like this business or if you got it in the IPO or what you think. So let me know in the comments below, guys. As always, guys, thank you for listening. Please subscribe to my channel, hit that notification bell, and let me know what further content you want to see. Cheers, guys.